Welcome to another episode of the Grbcic Duo podcast. Joined today by Matt Grbcic, my brother. Matt, welcome to the Grbcic Duo podcast.
Thanks, mate. Thanks for the invite.
Matt's a project manager, and I thought it'd be interesting to bring a project manager on and just get their perspective of what are some of the challenges in the construction industry at the moment, and what are some of the solutions to the challenges, and just get a bit of a forecast from Matt on what he sees happening in the next year or so on the Gold Coast property industry from a development perspective. So before we start, Matt's my older brother. He runs a project management company called MG Group that specializes in project management, obviously.
Yep.
So Matt, maybe just a little bit about yourself and MG Group, when it was established and what you guys specialize in.
Yeah, perfect. So I was very fortunate to fall into project management straight out of school. So I'm just shy of 20 years experience in the industry, and the business has been going for, this will be the 11th year. So I founded the business in 2014.
Yeah. And so MG Group, what does MG Group do? What do you specialize in?
So we specialize in client-side project management, development management, and then quantity surveying as well.
Okay. Beautiful. And so on the Gold Coast, are there any notable projects that we would know about that you've worked on, or is there a specific project that or asset class that MG Group does specialize in?
Yeah, so we've been involved and managed, I think we're at 140 something projects over the 10 years we've been in business, ranging across all sorts of sectors. So we made a very conscious effort to diversify into as many sectors as possible.
Yeah.
I feel very passionate towards that. So, we've done everything from industrial to residential, luxury residential, multi-rise, subdivision, medical, tourism, retail, aged care, retirement living. Yeah. So, we've got quite a wider range of sectors under our belt. And we've made a pretty big play into the community space too. So, so that's something the team's passionate about as well. So, for example, we've done a lot of surf lifesaving clubs and a lot of community projects, whether it be for sports clubs or recreation clubs as well.
Yeah. So we mentioned off camera before that there were different types of project management. So there was the label project manager was quite broad, but it can be split into two different sectors, which were you were saying that you've got the client-based project management, and what was the...
Yeah, so project management is a very loose term. I think it's loose. It's a loose term used in other industries as well as construction. But, effectively in the construction and development industry, there's two classes of project managers. You have what's called a contractor side project manager, and they work obviously for a contractor in the contractor's business.
Yep.
And then you have a client side project manager. So they'll work for obviously your client, your developer, or your principal, as it's sometimes called as well.
So for someone listening in that hasn't worked with a project manager, maybe just a very high level overview of what is your day-to-day operations, or what is your role in a project, the purpose of getting a project manager, or how would you describe that, what that purpose would be?
Well, I guess simply put, you're filling a knowledge gap or an experience gap. Okay, so, and that varies. So I'm of the belief that if you're going to have a project manager, they have to add value. They have to add value to the process and the project itself, right? So adding value comes in a number of different ways. So, for example, we have clients that are interstate clients. They don't have a geographical presence here. They don't have resources or a team here, right? So there's a need for that, right? So we bring value to that client by bringing that service.
And that you mean by connecting them to the right builders, the right contractors, the right architects, town planners? Is that the what you've been referring to?
I think probably a little bit deeper than that. Just probably understanding construction in Southeast Queensland and Northern New South Wales, particularly understanding the market, understanding what's working and what's not working.
Yeah.
So the process can differ significantly from, say, Melbourne and Sydney up to here.
Yep.
And specifically over the last probably 2 or 3 years, we've seen the market change and fluctuate dramatically. So one of the key roles we've played is mitigating risks for clients. So what's been challenging is keeping up to date with what we need to do to mitigate those risks.
Yeah.
Because we entered into a period where risks were, risks that had never been a problem in the industry before were just coming through thick and fast. So it's having a strategy to deal with that, understanding what it is, perceiving it, and then making sure you deal with it. So, effectively, that's what I see our role is for clients, is understanding what the risk is. I think the process of construction and development, people have been building things for years. So it's a process, and yes, there are people that do the process well and not well. So it's important to do it well, important to have a good framework and a good, quality assurance. But then it's going that step further and identifying risk, understanding what the risk is. So you got to have your finger on the pulse of the market, and making sure projects are procured the right way, set up the right way, contracts are reflecting the risk, and the way you manage the project needs to be, needs to sometimes change given what's happening in the environment.
Yeah, 100%. So, you've mentioned challenges very briefly just then. I'm sure that there's a broad range of challenges, but in the current market today, what do you see the biggest challenge the biggest challenge that a developer is facing prior to a project commencing?
I think there's several at the moment. So, if you just step back and you look at the industry in general, the elephant in the room is the scarcity of builders.
Yes.
Right. And what's happened, if you look at the stats and you look at the level of voluntary administration for builders, it's quite high.
Yep.
So, that's a real challenge. So,
do you have an opinion on why that is? Why
we
are facing the challenges.
Yeah, we experienced it firsthand on a couple of projects, in the last few years. So, I think that there's a couple of ways to look at it, but if I just look at it at pure data, we had a 40% increase in cost over a 2 to 3 year, drastic, right?
Yeah.
And it was touching 2% a month at one stage in its peak.
Yeah.
So if you signed a contract that was 18 months or a 24-month contract to build a building, it was very, very, very hard to honor that price. And if I step back from that and maybe give context to it, the builder signs one contract with the developer. Underneath that build contract could be 50 subcontracts.
Yes. Yep.
Right. So that builder, his risk is exposed over 50 subcontract agreements, give or take.
Yeah.
But if you had, we had the material upswing during COVID or in the beginning of COVID, and then then we had the escalation and the labor issue. So that was a very, very, very hard thing for builders, not only in Queensland, but obviously look at Melbourne and Sydney. It's very hard for them to control. And it's pretty hard for anyone to run a business if you've got 40% in escalation in
that you didn't predict. Yeah.
Yeah. So, so I think that's been the main challenge. I think, starting new projects now, I think that is in the back of most developers' mind. If they are entering into a contract with a builder.
So, is in 2025, or in respect to all that has happened, what sort of strategies are you putting into place now to mitigate that risk? Is there a way to mitigate the construction cost risk that a developer's got?
Yeah, there is. And it's it's not a one shoe, one size fits all. Yeah. So, you've got the model at the moment where a lot of developers are bringing the construction team in-house.
Yep.
All right. So that's working well in some cases and not well in others. So it's going to be interesting to see how that plays out. But I think that's a good way to combat the risk if you have the right team, if you have the right systems and processes, and you have the right cost management. So again, you're absorbing that risk. So you have, you have more control over that risk as the developer. So there's a trend at the moment for developers to take over that control and manage it, that risk, and take it over themselves. There's a lot of redesign happening at the moment on projects. So buildings are becoming more efficient. Generally, there's a play towards things that are less labor intensive. So building structures or building methodologies that are less labor intensive.
Yeah.
So there's a bit of a swing to that.
Is that in the design form?
Yeah, well, it starts in design and then obviously on site.
Or the actual processes?
Projects, yeah. I mean, labor rates are the highest, I think the highest they've ever been.
Yeah.
So there's a premium if you've got something that's labor intensive to build on site. And then it's time related too, right? So it's working out how to build something as quick as possible, and that's as less labor intensive as possible too.
So with knowing that, obviously the time frame between acquiring a site, getting your approval, getting maybe necessary pre-sales and starting construction is a lengthy process. And so I'm sure in your client pool, there's been a lot of projects that when first engaged, stacked up and the feasibilities demonstrated that it was a feasible project. Now with all this that has happened the last few years, build costs have escalated the way they have and the market has shifted. What is your advice that you're giving your developers with projects that may not be feasible, that were feasible and no longer feasible today? Is it a matter of going back and doing a redesign? Is there the strategies? What sort of strategies do you have? Is it maybe sit and wait for the market to catch up, or is it sit down and redesign? What sort of discussions are you having with the developers that are sitting on those type of projects?
Well, it depends what sector. So, like if we took industrial, for example, some of the advice was to sell the sites.
Yeah.
Right. Because you could just see,
the cost of holding it is just
diminishing. Yeah, you just make up that, you make that investment decision or financial decision based on the data you're getting. So, there were certain projects there where you looked at the economics of it and it just wasn't going to work. And I couldn't see, and when you do that, you can clearly see it's not going to work for the foreseeable future.
Yeah.
So then, I suppose we tailor our services specific to the individual. So it's understanding the client's needs and requirements. And sometimes it's better to divest and invest into a new project.
Yeah.
Or double down into another project.
And flogging a dead horse, as they say.
Yeah, correct. Because the energy that it's taking at the moment to get projects to that construction, it's quite a lot, right? So it's a lot of mental, sometimes emotional energy.
Yeah.
But it's time and money, right? So sometimes you have to make that decision. I think that the other thing is looking at if it's getting quite granular and looking at, so the way the financial modeling, there's a lot of more scrutiny on it. You've got to allow for escalation. You allow for a lot more escalation, and you've just got to be looking at that gross realization in a lot more detail. I think we have had a couple of scenarios where we've gone back to the drawing board completely. So a really good case study was one of our commercial and medical projects that we're looking after.
Yep.
We were sitting at a budget when COVID hit of about $28 million.
In that the budget you're referring to as the total cost to build, yeah?
No, yeah, just construction.
Okay.
Yeah, so that skyrocketed to $48 million.
Wow.
As of right now, right, over a 3-year period. So now there's reasons for that. One is the escalation, the issue with the builders in the industry at the moment, and then the lack of competitiveness. So, but generally speaking, the cost of building
went up 20 million, yeah.
Yeah, went up 20 million. So, that's a very daunting prospect. And if you see that at face value, you go, oh, no way, right?
Project doesn't stack.
Yeah. But if you get in there, you look at the building uses, you look at the building economics, the efficiencies, you change the way you've maybe modeled it.
Yeah.
In terms of, what's the rental returns? What's the long-term look on that? Let's forecast it over 5 and 10 years. Let's compare a hold model versus a buy model. Once you get into the details of that, you kind of start to see the light at the end of the tunnel, and you start to go, well, if I change this building use here, if I change a couple of levels, if we negotiate a different deal with this anchor tenant, if you start doing a lot of little things right, you can actually find your way through it and
navigate.
So that's a good example of that particular project was good, because I think we're sitting at a GR for the client of I think we're just shy of 100, so we're at like 90 something million.
So that gross realization, the total value of the project when completed.
Yeah, and that's obviously we've had an upswing in GR values, but as well, so you've got to take that into account. But it's changing the way you looked at it, taking a fresh look at it, and then really getting granular on every possible item. So building efficiencies, building uses, the market, the hold strategy, the buy strategy, the funding strategy, going in, changing the approval. We in this particular instance, we looked at an accommodation model for the building, a short-term accommodation for the building, which would be held, and we've gone and strategically aligned ourselves with other parties as well, which has then boosted the overall.
All right, so that project that you had obviously designed. You were in a position where it would have cost $28 million for the construction, blew out to 48. So you sat down with the client and had a look at how to reposition it. You've repositioned it completely. You changed the use. So you went to change the use from the original use to include an accommodation portion on it.
Yep, and a car park as well. So we looked at the commercialization of a car park as well on top of that.
Yeah.
We got strategic partners in, right, to fill the accommodation. So we de-risked it.
Okay, they're pre-committing their spaces.
Yeah.
And obviously negotiated with the tenants to pay a higher rent, which is how you increase that gross realization.
Correct. And then, if you get this particular building's the medical building. So if you get the right tenants in and you build the right ecosystem, then there's a premium to that, right? So it's understanding the market you're playing in. So for example, scientific research is a big element in this building.
Yeah.
Innovation was a massive draw card for this building. So understanding that, and then drawing in the right tenants and the right building occupants, and they all want to be around each other. They're all talking about it amongst each other.
Yeah.
So we started to get a lot of interest, and
so organically,
it's organically. Yeah. So I mean, that's a quick summary, but that's a 2.5-year process, right? So that's a 2.5-year process of getting it, going down a lot of avenues and it not working out, right? And just working our way through it. But, the decision was made to back the project, and, it's 2.5 years, and it's, we've got a viable option forward.
So it sounds like you really embed yourself in the project. You sit down and look for every possible solution to overcome the issues that you've got to actually start the process. But it does get to a point where you have to draw a line in the sand, and sometimes it's more feasible to move on and move on to the next project, sell the site.
So it's experience, right? So you can look at a job. We had another job in Brisbane, a residential project. When we started it and turned dirt, I think there was 20 dwellings on the site, 20 or 30 dwellings. The profit margin was like 8%, right?
Yeah.
I knew the strategy was right for the client.
Yeah.
Right. That they hadn't actually sold. They could build without selling. They could get the funding without selling the units. So we were able to secure that funding option for them. But I knew that the build price was actually still pretty good.
Yeah.
And the GR, there was enough evidence in the market to say that the GR was going to upswing.
Yeah.
So if you look on paper, it was just experience and looking at it and going, no, that job's going to be fine, based on some solid research. So they ended up with a 30% profit at the end of the job.
Well, you're giving advice on what the market's going to be doing in 2 years' time.
No. So we were looking at where it was trending.
Yeah.
And we were looking that we had a solid build price, and we'd done our research on the build price.
Okay.
So the client can make an educated decision that we were going to get that upswing.
Yep.
That we're going to get that upswing, and that 8% was going to get improved on.
Yep.
Just didn't know how much. And we ended up.
It's the 30%.
Yeah, we ended up at 30%.
What's the benchmark in the industry for typically? Is it about 20%?
Just different sectors.
Different sectors.
It could be 18 to 25%.
Yeah.
More.
So the interstate developers, from our experience, have really dropped off the radar in terms of inquiry. We've seen that pre-COVID we had such a high demand from Sydney and Melbourne developers acquiring sites, and that's really dropped off. And I feel that a lot of that is because they have a disconnect to the Gold Coast market, and it's very hard for them without having a footprint on the Gold Coast to get the right advice. And so what would your advice be to some interstate developers looking to commence on the Gold Coast, get a footprint on the Gold Coast when it comes to acquiring sites? When do you typically become involved with a project? From the due diligence stage? Have they generally already acquired the sites? I mean, in the perfect world, when would a project manager be engaged?
So the project manager can be engaged at any point in the process.
Yeah.
We're sometimes engaged right at the start.
Yep.
So for DD, so there's a couple of projects we're working on now in DD for clients, and we're basically modeling the entire project for them.
Yep.
And putting the timeframes in place and putting a strategy in place. So the area that we specialize I specialize in is that strategy part.
Yep.
So understanding what can be done on the project, how is it going to look financially, the timeframes in which we can do it, what procurement strategy are we going to need, how are we going to pull it together, putting a whole framework together. So I do a lot of that. But I guess, what I've observed is that I think a lot of interstate investors are maybe sitting back and watching the coast at the moment. I think there's probably a little bit of hesitancy around the builder selection.
Mm-hmm.
And maybe the preconception at the moment is unless I have my builder solution wrapped up, I can't probably proceed with projects.
Yeah.
I think that conversation's come up a bit for us recently. So I think, definitely having those relationships locally is important.
Mm-hmm.
But just getting that third set of eyes looking over the project.
Yeah, an unemotional, detached view of the scenario.
Yeah.
Because I think the challenge for us is we sell sites that will come on the market. Obviously, they've got a DA approval. The reality is that site's gone to market because the present owner with that approval couldn't get the project to work. And so I think a lot of people looking at sites need that connection to someone with a lot of local knowledge to see, well, how can we have modified this DA, or what can we do? How can we pivot this project to make it work, rather than just assess sites on what the current approval is? So that's a huge role, and I think that's where people can get a lot of value from a project manager.
That's a really good example, because the market's changed. So, if you go back 6 years, 7 years, the Gold Coast was a single level basement, blockwork construction.
Yeah.
The market's moved. You can't, that's not what's working at the moment. So we are seeing, no old DAs are working. They're all getting rehashed at the moment.
Yeah.
And knowing what to do and what not to do can shortcut that whole process. We were in a meeting yesterday. There was a DA, one of the sites we're doing DD on the moment, there's a DA on it at the moment. We'll rehash that whole DA. We're going to change the whole concept of the DA, still keep it the same building use, but we're going to change the whole, we'll go to precast. We'll try to do it all over 1 or 2 levels. We'll get the building efficiencies down to probably 85, 82%, whatever it is. So we can do that because we pulled in the right guys, and the right guys to tell us about traffic, town planning, architectural, know the soil, know what the footings are going to be. So we kind of have a good idea of where the construction rate's going to sit.
Yeah.
Okay. That allows us to plug it into a indicative feasibility. We know where the GR is going to be. We got good market data on where the GR sits. So, I think once you can shortcut that process, you can just work through the deals a lot quicker.
Yeah, and if if you're doing multiple a week or a month, you've obviously got the time and the resources to make it a hell of a lot quicker for somebody.
Yeah.
Rather than try and discover it by themselves. So moving forward, Matt, if in the market 2025 now, do you see there will be a dramatic shift in any of the market sentiment? Will construction costs, will they stabilize? Will they make it easier for people to make assumptions on developments? Where do you see the construction prices going over the next 12 months?
That's a good question. Well, the honest answer is I'm not 100% sure. I think there's a couple of contributing factors. I think at the moment there's a big pool of resources to infrastructure and state projects. How many of those will get to construction? How many of those will get built?
Yeah.
So that's a question mark. I form the personal opinion, the personal viewpoint that a lot of the government projects are going to have budget issues.
Yeah.
I don't know whether I'm right or wrong on that. That's just a personal opinion. You see, if the private sector is struggling at this level, the state government, the government projects are also going to struggle. So I think that's going to be interesting, because that's going to pull it is pulling a lot of the resources at the moment.
Yeah.
So is that going to continue? I think that we will most likely see a stabilization of construction prices at some point.
Yeah.
My concern is the lack of competitiveness in the building market at the moment. So
creates a monopoly, and then
so then it comes down to your procurement, how you're procuring the projects, and it's very hard at the moment to check price things in this market. So I think that's going to be a challenge moving into 2025.
One of the other challenges you mentioned, and the solution that a lot of people have got, is to become vertically integrated and do their own building. But on a macro level, the Gold Coast, do you see that there will be builders that come in and fill the holes with the lack of building companies that we've got? Would it be the smaller companies? Will there be growth, and will they be able to facilitate the bigger projects?
Yeah, I think there's going to be I think there's a huge opportunity, and there's a gap in the market for that. There's a big gap in the market.
Yeah.
The way things look now, that's going to change. If you look at across the different sectors, even if you look at residential, there's going to be a requirement for more houses, more units you are going to have opportunities for builders to grow and come into the market. So I do see that happening.
Yeah. And then final prediction, I guess, if we've spoken about the challenges, and we'll just summarize. You've got a challenge on whether or not we'll get more builders enter the market to fill the gap. I think that you're 100% right. There's a huge opportunity for that. But if you were a developer and you had the option to become vertically integrated and have your own build team, or subcontract the builder, which one, from a security or a risk perspective, which one would you do?
Depends how you do it, because there's a great opportunity for vertical integration at the moment.
Yeah.
And if you get that right, it could be, we're doing that at the moment as well.
Okay.
So we're helping clients with that at the moment too. And that is a huge opportunity equally, right?
Yeah.
Depends how you do it.
Okay.
So, you can sign a contract with a builder and do it all wrong.
Yep.
You can set up a vertical I think there's opportunity
both ways. You just have to do it correctly.
Yeah, and the moment it's easier because to go vertically integrated because of that unknown with the builders at the moment.
Yeah.
Now that may or may not change, but it depends how you procure the project and how you set it up. There's a lot of risk to vertical integration. There's a lot of risk for builders stepping up into the market and coming into the Gold Coast market if they haven't been here before.
Yeah.
There's a lot of risk. So there's risks on both sides, but there's still opportunity. I still think there's opportunities either way. If I'm a developer, the benefit and the economies of scale of that vertical integration is powerful as well. But there's a ton of risk with that.
Yeah.
Because now you're you're on the hook for everything. So yeah, I think there's opportunity. I honestly believe there's opportunities. You can't discount one against the other. I think there's good opportunities.
Yeah.
Both those.
Well, it'll be interesting next couple of years because that'll obviously filter out and it'll either work for some people or it won't.
Yeah, well, I think it's going well for a lot of people in the market, in the industry at the moment.
Yeah.
So, and the market's going to continue to do its thing.
Yeah.
And keep evolving.
Perfect. Well, I think that's about it. I think we've it was interesting to get your perception or your perspective, on what's happening in the current market. Interesting to see how or where the value of a project manager comes into a project, and I think that from what we spoke about today, the importance of getting involved early on, because the solutions that people are generally looking for, I feel, may be the same solutions, or you may find there's a big crossover of issues that people have. And
what's working is working.
Yeah, there's teams that have already found solutions, and so it fast tracks that. And so interesting to get your perspective of what's happening in the next 12 months. So I appreciate you coming on, and you're good for people to find out that there is another Grbcic, Matt Grbcic from MG Group. And so appreciate you coming on, Matt.
Thanks for having me.
Awesome, thank you.